You check your credit score app for the 100th time this month. 780. You feel a little glow of pride. You did it. You're responsible. You're winning at adulting. But here's a question nobody ever asks you at that moment. Winning at what, exactly? Most people believe a high credit score is proof they're good with money. Banks reward you for it. Credit card companies chase you for it. Your parents probably bragged about theirs at dinner. But here's the thing nobody tells you. A high credit score isn't a measurement of your wealth. It's a measurement of how reliably you make debt payments. And those are two completely different things. My name is Nick, and I spend way too much time thinking about money, financial psychology, and why some people seem to build real wealth while others stay stuck chasing numbers that don't actually matter. If you've ever wondered whether your obsession with your credit score is actually helping you or quietly working against you, hit that subscribe button and give this video a thumbs up if it changes how you see things. Let's start with what a credit score actually measures. It's not your net worth. It's not your savings. It's not even your income. A credit score measures your relationship with debt, specifically, how consistently you borrow money and pay it back on time. The entire system is built by lenders, for lenders. It exists to answer one question: how profitable and low risk are you as a borrower? That's it. Your score isn't a report card on your financial health. It's a marketing tool for the debt industry, dressed up to look like a virtue. Here's where it gets interesting. The way you build a great score isn't by avoiding debt. It's by using it, consistently, over years. You need open credit lines. You need a mix of credit types. You need utilization and repayment history. In other words, the system is designed so the only way to win is to keep borrowing. Someone who pays cash for everything and never touches a credit card often has a mediocre score, even if they have zero debt and a fat savings account. Meanwhile, someone juggling 3 credit cards and a car loan, barely staying afloat, can have a fantastic score as long as they hit their minimum payments on time. Does that sound like a measurement of financial health to you? Because it's not. Think about the boulder on a hill idea for a second, except flipped. Most financial milestones are about building momentum toward freedom. The credit score system builds momentum in the opposite direction, toward dependency. The better you get at using debt, the more debt you're offered. Your limit goes up. New pre-approved offers show up in your mailbox. Every reward for good behavior is another invitation to borrow more. This is where the psychological trap kicks in. Once you've built a great score, it starts to feel like an asset. Something you protect, something you're proud of. But protecting your score often means keeping accounts open that you don't need, carrying small balances instead of paying things off completely, and avoiding big financial moves like aggressively paying down debt because you're worried it might ding your utilization ratio. People have genuinely delayed paying off loans early because they were scared it would hurt their score. Let that sink in. The system convinced them that becoming debt-free was a risk. Here's the math nobody walks you through. Say you're carrying a $6,000 credit card balance at 22% interest, making minimum payments to keep your utilization healthy instead of aggressively paying it down. That's over $1,300 a year in interest. Money that vanishes. Not invested, not saved, not growing, gone, so that a 3-digit number on an app can stay a little higher. Meanwhile, if you took that same $1,300 and put it into an index fund every year for 10 years at 8% growth, you'd have built close to $20,000. Your credit score can't buy you a house. It can't retire you. It can only get you approved to borrow more money, usually at a price. And that's the real trap. A great credit score doesn't unlock wealth. It unlocks bigger loans. Higher limits. You're pre-approved for $40,000. That's not a reward. That's bait. The entire infrastructure of good credit exists to make it easier, not harder, for you to take on debt for a car, a house, a vacation you can't quite afford. The system isn't rigged against people with bad credit. It's rigged to keep people with good credit borrowing forever. Now let's talk about what actually builds wealth, because it's almost the opposite skill set. Wealth isn't built by proving to a bank that you'll reliably make payments. It's built by needing the bank less and less over time. The habits that create financial independence, paying cash, avoiding interest, building savings, investing consistently, are frequently the exact habits that keep your credit score stagnant or even lower it slightly. There's a reason so many financially independent people have boring credit scores in the 720s instead of the 800s. They stopped optimizing for the metric once they realized the metric wasn't the goal. Here's an example that plays out constantly. Someone gets a 0% financing offer on a $35,000 car because their score is excellent. It feels like a win, free money, right? But the truth is that offer only exists because the dealership and lender know an 800 credit score usually means someone who'll take on the debt and manage it responsibly for years, generating fees, add-ons, and eventually a trade-in cycle. Your excellent credit didn't save you money. It made you a more attractive target. Compare that to someone with a decent but not flashy score who instead spent 3 years aggressively saving, paid cash for a reliable $12,000 used car, and put the other $23,000 into investments. 10 years later, that money has more than doubled. The person with the worst credit score is dramatically wealthier. But at the dealership, in that one moment, they looked less impressive on paper. This is the part that really gets me. We've built an entire culture where people brag about their score the way they'd brag about a salary or a promotion. TikToks about hitting 800. Group chats celebrating credit glow-ups. But almost nobody is out here celebrating hitting $0 in credit card debt, or paying off their car early, or having 6 months of expenses saved. Those milestones don't come with an app notification and a little green check mark. They don't feel as exciting. But they're the ones that actually change your life. There's also a quieter cost here, the mental one. Chasing a credit score keeps you locked into scarcity thinking dressed up as responsibility. You start managing your finances around what a scoring algorithm wants to see instead of what actually builds security. Should you close that old credit card you never use? The algorithm says no, it'll hurt your average account age. Should you pay off that loan early? The algorithm says be careful, it might lower your credit mix diversity. You end up making financial decisions to please a number that has never once helped you sleep better at night, cover an emergency, or retire early. None of this means credit is evil or that you should never use it. Credit is a tool. Used well, for a mortgage at a reasonable rate, for building initial history, for genuine emergencies, it's completely fine. The trap isn't using credit. The trap is optimizing your entire financial identity around a number engineered by the same industry that profits every time you borrow. The moment you start treating your credit score as the goal instead of a side effect, you've handed the steering wheel to people who make money off your debt. So here's the real shift. Stop asking, how do I get my score higher? Start asking, how do I need debt less? Pay things off completely instead of leaving a balance for optics. Build actual savings instead of an emergency credit limit. Let your score do whatever it does as a natural byproduct of financial discipline instead of chasing it as the main event. It'll probably stay perfectly fine. It usually does. But it'll stop being the thing driving your decisions. The next time that app tells you your score went up, ask yourself one question. Did I get closer to being free, or did I just get better at being borrowed from? Because good credit was never designed to make you rich. It was designed to make you reliable for someone else's balance sheet, not your own.